Accounting Unit 2, 2018, Paper 2, Module 1, prepared and presented by Mr. James. We have here some data that deals with the wages and salaries of Zamo Limited. And before we get into the question, let's see what they required. It requires to calculate the following: the number of employees in the assembling department who will be required to meet the production target of 1,680 units, and the weekly pay for Scott and Celia for that week. So this must be 2 employees there, and they have a target production that they want to reach, and they want to find out how many employees it will take to make that. Okay, Zamol Limited manufactures an electronic device that passes to 3 departments before completion is followed. We have 3 departments here: the time, the employee, and the wage rate for each employee in the various departments. Additional information: the company had set a target for the completion of 1,680 units for the previous week. The standard work week for each employee is 35 hours per week. Employees in the foreman and assembling department are paid a premium bonus where the employee receives a quarter of the time saved in additional pay. Employees in the finishing department do not qualify for a premium bonus, but instead get 1.5 of the hourly rate for any overtime work. Alright, so we have differences between the different departments as far as the remuneration is concerned. Scott and Celia work in the foreman and finishing department respectively. The following information relates to their work hours and output for the previous week. Scott worked 38 hours, Celia worked 40, output was 56 and 114 respectively. Okay, so the first part of the question, right? One employee will produce he will work for 35 hours. That is 60 minutes at 60 minutes. So we multiply 35 by 60 minutes, and it's taken half an hour in the assembly department to produce 1 unit. So we divide that by 30, and we'll get 1 employee will produce 70 units per week. The number of employees to make the 1,680 units would be 1,680 divided by 70, which gives us 24 employees. Okay. Next, they ask us to calculate the weekly pay for Scott and Celia for that week. Alright, so Scott P would be his 35 hours multiplied by 1550, because he is in the foreman department. We are told that they are paid a premium bonus where the employee receives a quarter of the time saved in additional pay. Right, so his additional pay, we have to calculate the quarter of the whatever time. So let's do that first. Right, standard hours would be 45 minutes by the 56 units, and we'll get 2520. The 45 minutes is coming from here, and the actual hours is taken from here. Actual is 38 hours at 60 minutes, that's 2280. When you minus 2, we get 240 minutes saved, and that is equal to 4 hours. So in additional to his pay of 1550 an hour, you will get 2 or 4 hours pay again. So 35 by 1550 will give us 542.50, and then a quarter of the hours saved before that we just calculated here. Quarter by 4 by 1550 gives us another 1550 and his total pay would be $558. Celia's weekly pay would be her regular hours, 35 by $20.30. That's it from here. It was $710.50. And her overtime, because she worked 40 hours, would be 5 by 20 by 30 by 1.5. $152.75. The total fee would be $862.75. Okay, so let's move on to the next part. In this part, we are asked to make a decision. We are to prepare a cost comparison for the manufacture and purchase of the sub-assembly component. Okay, so it's a make or buy decision, and we are given the information here. So let's see what the data is. Assume that Zamor Limited has prepared the following cost estimates for the manufacture of a sub-assembly component based on an annual production of 8,000 units. A supplier has offered to provide the sub-assembly at a price of $16 each. Two-thirds of factory overheads, which represents executive salaries, rent, depreciation, and taxes, continue regardless of the decision. We will leave that out of the decision, okay? And they want us to prepare a cost comparison for the manufacture and purchase of the sub-assembly component. Okay, so let's right. So the the relevant costs would be direct materials, direct labor, and variable overhead. Out of the fixed overhead, the $2 or one third of it is going to be a cost saving if we decide to manufacture, and we'll take off two because these are avoidable costs. It could be avoided. The purchase price, on the other hand, is $16. And when we take the total, we will see that manufacturing is 11, and the relevant cost of manufacturing is 11, and purchasing is 16. So our decision would be the company should make the components and the marginal cost of production is less than the purchase price. Define the term EOQ inventory model. State two assumptions of the EOQ model. Determine the number of production runs for Zamor Limited using the EOQ inventory model. Note: to determine optimal production, ordering cost must be replaced by setup cost. Okay. Assume that Zamor Limited is now incurring total annual setup and carrying cost of 10,000. Calculate the firm's savings when the EOQ inventory model is applied. I was not too sure what they wanted here, but okay, Zamor Limited has expanded its business into the financial services market and is now manufacturing its own credit cards for its credit card division. The company plans to manufacture 27,000 cards to meet its annual demand. So here we have the annual demand. Zamor Limited expects that the cards will be distributed evenly throughout the year and has estimated the carrying cost of each credit card to be $3. Now we have the credit card carrying cost of $3 per unit. The production cost for each setup is $500, and we are told to treat that as the ordering cost. In addition, the company also uses the economic order quantity inventory model to manage its inventory. So for this, you were not given the formula, and you're supposed to know the formula for EOQ, right? But first, let's look at the model itself. The EOQ model is an attempt to determine the order size that will minimize the inventory cost. When we say the inventory cost here, what we are looking at is the carrying cost and the ordering cost. Okay. Part 2, we ask for two assumptions of the EOQ model. I've given you a number of them here. Any of the following two: the annual demand rate for inventory is uniform and known. The cost of items do not vary with order size. All of the order is delivered at the same time. The lead time is known well in advance. By lead time, we mean the time between ordering and when the goods arrive at your premises. The cost of placing an order is constant regardless of the size of the order, and the cost of holding inventory is a linear function. Okay, so any two of those would have surfaced. And we're looking at part 3 now. Determine number of production runs. You have to do the EOQ, calculate the EOQ, and that is the square root. The formula for it is the square root of 2 twice the annual demand multiplied by the ordering cost divided by the carrying cost per unit. Okay, you must do this part first before you find the square root, right? So when you work out this, you get 3000 production runs. Okay, and like I said, I wasn't so sure what it is they were asking here. Total annual setup and carrying cost of 10,000. Calculate the firm saving when the EOQ inventory model is applied. So it appears to me that the 10,000 minus the 3,000 by 3 production runs by the carrying cost will give us 9,000, and we take the 1,000 from the 10,000, we'll get save $1,000. During the production of electronic devices, solid chemical waste is produced. Outline one importance of chemical waste disposal, and two, state two guidelines which must be followed when disposing of solid chemical waste. Now, this is a part of the syllabus, disposal of hazardous waste. It's involve a course that should be built into your cost of production. Usually, we find students don't read up on it, and so they don't know how to answer these questions. Okay, so you should find a useful textbook, or you can Google it and get how to dispose of chemical waste in production, right? The first part, proper chemical waste disposal is important because the chemicals can be hazardous and can contaminate the environment, and human life and plant and animal life will be at risk. Okay, so this answer would suffice for 2 marks. 2. They wanted two guidelines which must be followed when disposing of chemical. I've given you 4 here. First, you will separate the waste according to the permissible categories, right? You have different categories of waste: liquid waste, solid waste, and some stages in between those two. So you have to separate them, and you can't put them in the same containers and things like that. Collect waste in containers that are chemically compatible and with secure lids. Okay, it must be chemically compatible. You cannot put some types of liquids in plastic containers because it's going to melt through the plastic. Okay, that's what it meant by that. The waste must be in compatible containers. You must label your containers clearly and do not mix solid and waste. Okay, brings us to the end of module 2, and Stay tuned, don't run away. Module 2 is coming up. First, we read what is required. Compute the predetermined factory overhead rate for each department. And part B, calculate the total overhead cost for job 748. And 2, determine the unit cost of job 748, which consists of 200 units of product 7. So, Plasmoid Limited manufactures a product using resources which form two departments, X and Y. Overhead is applied in each department to reflect the characteristics of the department. Department X has a large contingent of employees who are responsible for the first state of production, which is labor intensive. So we are given our first piece of information there, labor intensive. So we know Department X will be using the labor costs for the overhead absorption rate, and Department Y is predominantly automated and heavily dependent on machines to complete the productive process. So we would be looking at something with machine hours for the overhead application rate. The following additional information is available, and we are given the budgeted amount in direct labor cost, machine hours, factory overheads for Department X and Department Y. The accounting records of the company show the following data for job 748. We have direct material cost, direct labor cost, and machine hours. Okay, so compute the predetermined factory overhead rate for each department. Calculation of PHR for each department. Department X is labor intensive, so we will choose labor cost as the basis of apportionment. The POHR would be 900,000 over 600,000 divided. It is equal to 150 per $1 of labor cost. Right, so what this means, every dollar here of labor cost, you'll have 150 of overhead. Therefore, this would be, we will multiply the labor cost by 1.5 to get the overhead. Department Y is heavily automated, so we'll choose machine hours as the basis of apportionment. POHR would be 660,000 divided by 80,000 equal $8.25 per machine hour. Okay, we move on to the next part. Total overhead cost for job 748. First, we will apportion the overhead for Department X, where it's done according to the labor cost. The labor cost is 40,000. We multiply by the POHR of 1.5 for every dollar. We'll get 121,000. Apportioning to Department Y will be 6,000 multiplied by 8.25 equal 49,500. The total overhead cost would be 70,500. The total cost of job 748 direct materials would be 13,000 plus 21,000 from the two departments, and this should be 130,000. So direct labor 14,000 plus 6,000 will give us 20,000. And the total overhead applied was 70,500. We just saw that total job for the job cost would be 241,000. Okay, so the unit cost of job 748 would be 241,500 divided by 200, which is equal to 1,207.50. Incidentally, it appears I have two typos here. There should be 241,500 and here should be 130,000. And nevertheless, I did have the correct figure here and the correct figure here, so we end up with the correct figure here. Okay, so bear that in mind when you are studying this. And we have here a question which breaks some of the rules. It asks us first, let's see what is required. Calculate the per unit value of closing inventory using marginal costing. Okay, so they want the cost of inventory, unit cost using marginal costing, and prepare an income statement for Lasmoy Limited using absorption costing. Okay, now we are given some cost of manufacturing the product and the selling price of the product, right? So, but in here we see things like indirect materials, all variable. Alright, that breaks some of the rules because if it's variable, it shouldn't be indirect as well. Okay, variable costs are usually direct costs, and similarly here, the factory overheads are usually fixed costs. The variable costs are the direct costs, the direct materials, direct labor, and direct expenses. So we have some paradoxical information here given by keep, but nevertheless, when you see things like that happen in your exam, what you do is you don't enter into a debate with them, but you call it by whatever name they want to call it, right? And you go ahead with the problem. Okay, so first we're going to calculate the per unit value for of closing inventory using marginal costing. Costing is variable costing, and all the variable costs is taken into account, and the every direct materials $30, the indirect materials one that are variable, the 420,000 divided by 70,000 units to get the unit cost. Direct labor is 25. Um, Indirect labor 364,000 divided by 70,000 and we get 5.620. The variable factory overhead 560, 160,000 by 60%, and then because only 60% is variable, and then we divide by 70,000 to get the unit cost. So our total marginal cost per unit would be $70 when we add all these things coming down. Okay, so for marginal cost per unit, what you do is you take all the variable costs and you add them together. You don't include the fixed cost. The absorption cost per unit of closed inventory. We take the marginal cost from the previous question, 70, and we add on the fixed overhead, fixed factory overhead, 560,000 multiplied by 40%, and then we divide it by 70 with a 320 cents. So our total absorption cost per unit will be 73.20. And notice we do not include the admin and selling because that is not part of your production costs. Absorption cost, marginal cost deals with only the factory or the production cost. The absorption costing statement, we produced 70,000 and we sold 65,000. So 65 by $90, it is just 58,550,000. The production cost 70,000 by 7320. This is the absorption cost per unit. We'll get 5,124,000 and minus the closing inventory. The out of the 70 produced here, 65 was sold, so we remain with 5 in inventory, and we got 7320 multiplied by 5 gives us 366,000, and the cost of goods sold would be 366. From that gives us 47,58,000. Our gross margin is 1092. Our selling and administration, which comes out here, we get a net income of 42,000. Very simple, and please stick around for the module 3. And this module is based on planning and decision making. And the first part of the question asks to outline 3 objectives of budgeting. I have listed on your screen here 7 in fact. First one, planning. Budgeting is a formal means by which investigation leads us to a financial statement of future intent. The formal aspect of preparing a budget through a budget committee provides for participation in the planning process. Okay, two, coordination. Organizations are complex arrangements of separate parts whose coordination is necessary to achieve the best results for the organization as a whole. The budget can act as a form of coordination of human effort by allowing separate parts of the organization within the firm to work together to form plans and monitor situations. And three, communication. The budget can be used to communicate plans and control information. Four, motivation. A budget provides a target which can influence aspiration level and motivation within an organization. Five, control. A budget serves to control specific operation activities or groups and to prevent wastage and inefficiency. Six, performance evaluation. The budget can be used to measure the performance of individuals or groups by monitoring the ability to achieve targets. Authorization. The budget can be used to authorize expenditure or the pursuit of certain initiatives. Once the budget has been approved, it can become a permission to spend. The second part, part B, we ask for a production budget and a schedule of direct materials required. Okay, so the Lambert company manufactures wooden desks. The production manager needs to determine how much lumber should be ordered for the months of August, September, and October 2018. Budgeted sales for the last 5 months, 2017, are as follows, and the sales are given to us here in units. Each desk required 40 feet of lumber at a cost of $85 per square foot. The economy wants to maintain an inventory of desks equal to 20% of the following month's sales. At the beginning of August, 124 completed desks are on hand. The company maintains an inventory of lumber equal to 15% of the next month's need. At the beginning of August, 3612 square feet of lumber were on hand. Inventory of lumber at 31st of October is estimated to be 3696 square feet. Okay, return to the answer across here. In order to do this, you have to know this formula here. The expected sales and the desired inventory, the ending inventory that is, would give us the total required units. And from that, we minus the beginning inventory, we get the required production. Okay, the reason for adding on the inventory to the sales is because you this is what you want to produce as well. You are going to add them on to your sales because you need to produce them, and the ending inventory is part of the sales for the next month. The beginning inventory, on the other hand, you don't need to include them in your production because you already have them in your stock in hand by the time that date arrives. So you minus them out and get your required production. Okay, so we put in the sales first across the months 620, 530, 580. The desired ending inventory is 20%, sorry, of the next month's sales. So this 106 here would be 20% of the 530 here. The 116 would be 20% of the 580 here. The 120, on the other hand, would be 20% of the 600 here. Okay, and we finish, we add those two together and we get the total required units. From those, we're going to minus what we already have on hand. We 124, we are told that at the beginning of August, 124 completed this on hand. Okay, we minus it and we get 602. Now, the desired ending inventory becomes the opening inventory of the next month. And the desired ending inventory here becomes the opening inventory of the following month. And 120 would be the opening inventory of the next month. We're finished, we just minus the figure and we have the required production here. That takes care of the first part of the next part of it requires a schedule of direct materials required. Notice it does not ask you for the payment. Okay, so it means this piece of information here. $85 a square foot was not would not be used. Okay, for the production budget, we put in the amounts required and we multiply it by the amount of materials required per unit, which is 40. From here, 40 square feet of lumber. So we get total square feet required for production 24,080, 21,600, 23,360. And again, we go into the same formula, desired ending inventory, added on, and minusing the beginning inventory. Okay. And desired ending inventory, we are told, is 15% of the next month need. So 15% of this will come here, and 15% of this will come here, and we are given the 3696 over here. Okay, the ending inventory for October, and we get the total materials required here. Then we minus the beginning direct materials, these amount coming from here. The desired ending inventory becomes the opening inventory of the next month, and this one will go to October. Direct materials required, and we have the amount here to answer the question here for the teaching man. The last part of the question: explain the concept of standard costing. 4 marks. A standard is a predetermined cost or budgeted cost which is used for planning and control purposes. In standard costing, actual results are compared and evaluated against the standard cost, a process called variance analysis. The development of a standard involves identifying the types of material and labor to be used in production and their related prices and quantities. From these, the standard will be set. So that's enough for 4 marks. You have 4 points there at least. Two types of standard costing and explain one type. Okay, I took two types to mean uh, ideal and practical. Okay, ideal standard costing set standards only attainable under the best circumstances or most favorable conditions. It assumes nothing that can go wrong will occur. Okay, the emphasis is on the word ideal, right? And so you'll have ideal conditions to work under, and perfect materials, and all of your uh, factory and so on. There will be no downtime and all of that. Okay, the labor unions would not clamor for increased wages and would not strike. All those are involved in ideal standard costing setting standards. The practical standards are much tighter, but they are attainable. Keyword is attainable even under adverse conditions, right? So even if things like strikes and so on take place, you can still meet your standard. And even if you don't have uh, ideal conditions to work on you're still gonna make your standard. Okay, so that brings us to the end of the presentation.